Welcome to episode 30 of the Minds Capital podcast, the show devoted to the growing world of independent sponsorship and entrepreneurial private equity. I'm Will Smith, here with my partners in Minds Capital, Nicholas James and Max Lummis. Today's conversation is with Jeff Goldstein of Breakwater Management. We got to know Jeff as we were considering an investment in his acquisition of Chemistry, a creative agency. An investment we did make, so it's always fun to feature a sponsor we're invested in on the podcast. Nicholas, what did you think of our conversation with Jeff?
We met Jeff earlier this year. We were introduced to him by the Cooperman brothers at Align Collaborate and ended up investing in Chemistry Communications, a marketing agency. We talk about that deal on this call. More generally, no pun intended, but I personally had fantastic chemistry with Jeff from the get-go back in the spring. We've become friends since then. We talk about kids, personal life, and his mentorship is already valuable to me, as well as it's fun to partner on this deal. And he comes across as a highly polished senior executive, because that's what he is. He has been a CEO of public companies in the past, and he has had a long career, particularly in the media and marketing industry. And so we talk a little bit about how he, as a senior executive with such a long track record, was compelled by the independent sponsor model in this episode. And where most independent sponsors are in their 30s or 40s and come from a deal background in banking or PE, Jeff's route into independent sponsorship was different, coming from that more ops-heavy background. So you can notice that he is a people person, a people leader. He will talk with confidence about the toolkit that he applies in order to improve businesses. In this episode, we talk a little bit about the digital transformation toolkit in particular that he applies. And just really a great experience to have someone as seasoned as Jeff share his perspectives like this with us.
The other thing that made Jeff a little bit of a standout is his media background. And we spend a lot of time in the conversation discussing media, of course, near and dear to our hearts as podcasters, as a media first fund. But we talk about opportunities in, of course, creative agencies, with AI, with the creator economy, with traditional B2B trade publishing. So wide-ranging look at media, which is just not really a category that I feel gets a lot of attention from independent sponsors. And we talk about that very dynamic and why that is. So I thought that was a lot of fun for me. Max, what did you think of our conversation with Jeff?
It was a fun episode, and I second what you said, Nicholas, about Jeff just being such a polished professional. He's or has been a public company CEO in the past. It shows when you speak with him. And when we were diligencing the Chemistry Communications deal, he just has that level of professionalism that can only come with years of experience being at the helm of a public company. He partnered with Breakwater Management in his route to becoming an independent sponsor. And Breakwater brought the deal experience and the deep bench of analysts and things like that. And Jeff brings that great operational experience and experience having been with and grown a very, very large enterprise. So it's exciting. And it's certainly a unique perspective that he brings. I really liked when you all got into the AI discussion and the fact that Jeff believes so strongly that AI is a boon for Chemistry Communications, and Chemistry being a marketing company deals with CMOs at companies. That's their main sort of target client. And Jeff sees that as a huge opportunity because he says that AI and all those tools are moving so fast. And I see this myself, that just nobody can keep up with what is even out there at this point, and that's only going to accelerate. So almost on the spot, Jeff came up with, and perhaps they had already been discussing it at his meeting previously that day, but he almost came up with on the spot this new service offering, which is sort of consulting CMOs on the new technologies that are available and the opportunities that are out there, and sort of filtering all these different programs and tools that can augment a company's marketing arm. So that was super interesting. He's very visionary, and I think that's that CEO mentality that he brings to the table.
Well, your point about his visionariness, his vision, we talk a little bit about white space and how he thinks about white space in the interview. And I also think that differentiates him from a lot of sponsors that we talk to because, of course, always, as Jeff puts it, what does he say? Something like, a reliable business with optionality or something with optionality on top. And so when we think about optionality in these businesses that sponsors acquire, we think about levers, but often they're pretty obvious, straightforward levers to pull and less about kind of new market opportunities. But Jeff has this perspective or this orientation to white space and new market opportunities that I think comes from his decades of being an entrepreneurial CEO, but in kind of tech and in media. So it did feel like he had a little bit more vision about where he could take his acquisitions than your typical sponsor, which I thought made him interesting, like you said, Max. Great. Max, you were going to share with us a key finding from the Citron Cooperman report on the independent sponsor market that just dropped. What was that, please?
The 2025 Citron Cooperman independent sponsor report dropped last Wednesday. It is full of great information. The one metric I want to highlight in this episode is the one that I think most investors want to know about, and it deals with returns in the independent sponsor space. So this is really geared towards limited partners. So if you're considering investing in the independent sponsor space in some fashion, what kind of returns can you expect? I mean, that's what we would all love to know that, right? So interestingly enough, this report's been going on for a long time, I believe since 2017. And so this is a metric that they track. And it over at least the last few years, it's been fairly consistent. But in the 2025 report, in this surveyed 172 professionals, 151 of which were independent sponsors, 68% of the responses indicated that their investors got a 3x or more MOIC, which is pretty good. 37% of the respondents indicated that their investors received a 5x or more MOIC, so multiple of invested capital. These are very, very strong returns across a good survey of folks. And so what conclusions can we draw from this? This is a very strong asset class. The returns are very strong, certainly stronger than the public markets. They come with risk, of course, but I think this benchmark just gives us an idea of what could be expected from a limited partner's point of view. Now, obviously, it takes time to get these returns. These are not super liquid investments, could take up to 5 years or more in some cases for an exit and for a liquidity event to return the capital to the investor. But I mean, I like 3x to 5x MOIC. It's pretty strong.
5x, 37% of LPs reported 5x.
Yeah, that's pretty strong.
Wow. That is really strong. Great. Excellent call out. Thank you, Max. Before we get to the interview, a reminder that Minds Capital actively invests equity in independent sponsor deals. So if you are a sponsor raising for an acquisition, raising for a deal, please submit it to us. deal@mindscapital.co. And if you're interested in investing in Minds Capital as an LP, there's a pre-registration form on our website for accredited investors. If you are an accredited investor, you can fill that form out to be kept in the loop on future raises, one of which is right around the corner. We're already on track to be oversubscribed for Fund 2, which we've really just informally launched. So we're really excited about that. Still, fill out that form at mindscapital.co if you're interested in learning more and if you're an accredited investor. Okay, here is episode 30 of the Minds Capital podcast with Jeff Goldstein of Breakwater Management. Enjoy. Welcome to the Minds Capital podcast, your connection to the growing world of independent sponsors and entrepreneurial private equity. We are your hosts, Will Smith and Nicholas James. Formerly a public company CEO, Jeff Goldstein became an independent sponsor under LA-based Breakwater Management's umbrella. Jeff has leveraged his extensive network from a career as a senior executive to source and execute and grow deals, predominantly within the media industry. We at Minds Capital are proudly invested in his latest deal, Chemistry Communications. Chemistry is a full-service marketing agency that we will get to later in this conversation. Jeff, welcome to the Minds Capital podcast.
Thanks. It's good to be here.
Jeff, let's start with Breakwater, as I mentioned, which is a private equity fund firm, and yet you're doing the independent sponsor model. How does that work?
Yeah, sure. So Breakwater has been around for about 15 years. My colleagues have been at it for a while. The focus of Breakwater's investment strategy had been, until we pivoted to this independent sponsor strategy, a focus on credit investing. That's the background of my colleagues. So we had been a sector agnostic credit investor. With me joining, we decided to pivot and focus on the industries where I have my kind of background and expertise. And so we have kind of this quasi-independent sponsor model where we do have an existing portfolio of credit investments. The funds there are fully invested. So we're fully focused on this independent sponsor model. So for me, it's having the benefit of some folks who have been in the fund model and have dealt with LPs and leveraging off of that platform to go out to find terrific businesses like Chemistry to invest in the media. We call it media marketing and tech-enabled services. So excited about Chemistry. It's been fun, and I'm happy to have this conversation with you.
Great. And so you represent Breakwater's first entree into the independent sponsor world, or they're kind of moving in that direction is with working with you.
Yeah, that's right. So I have a couple of partners and colleagues. So we have a small team of about 5 folks, but we're all focused on this strategy. And what we believe is that the mix of the experience that I have, which is originally, as you guys know, in finance, but then the bulk of my career has been spent kind of on the operating side of things, along with the rest of my team, which is primarily kind of career investment folks. We think it's a differentiator. We like to think that we bring kind of some of the best of both worlds, where we have somebody like me with real operating experience, but that's been around the investment world and has done a lot of transactional work, along with my colleagues who have spent their time solely on the investment side. So far, so good.
Well, let's actually hear more about that and maybe flesh out your career for the audience a little bit, Jeff. We won't have time to go through the entire thing, but you were as we said, CEO of a public company, among many other positions, very senior positions. And being an independent sponsor is a little bit more of a hustle and grind than maybe being a senior executive. So how did you get attracted to doing this work, and say more about kind of the contrast and comparison between them?
Yeah. Well, I've always enjoyed the entrepreneurial side of the work I've done in the past. In addition to the public company CEO job, I also, before that, ran a private company called Price Grabber, which is an e-commerce enablement business. That was very much of an entrepreneurial endeavor. It had been previously sold to a company called Experian, and then I worked with an Experian executive to spin it out and then ran it. It involved kind of working to reposition the business, and we ultimately sold it. That was a lot of work. That was very entrepreneurial. It was hard stuff. You don't have the kind of infrastructure you have inside of a big company. And I found it really satisfying, fun and satisfying. There are things about it that obviously are harder, but it was really satisfying. inside of a large company, you have a lot more resources, you have a lot more people helping you with things. But I think you can also feel more disconnected from what's actually going on inside the businesses. And so for me, the model that we have at Breakwater, which is focused on the lower middle market, means we're working typically with founder-led companies who have had great success, but with whom we can work directly to help them grow the business. So I think it's a good model. I would call it an emerging model, but it's so far so good.
And so you were really attracted to the entrepreneurial nature of the lower middle market.
My last real big corporate job was post the sale of United Online. I went to work for a very large corporate, super interesting business, tons of resources. But even if you have a senior role, you are a relatively small cog in a very large machine. You tend to get very disconnected from what's actually going on inside the business. So I have been having a lot more fun here.
So it's less about the role, it seems like, and more about the size of the company that attracted you, that you wanted to be involved in smaller businesses. And sure, you can be hired as a Portico CEO, you would have all the qualifications to be that role, but actually it's more exciting to be on the ownership side and actually govern the overall deal. So hence the attraction to the independent sponsor model, where you get to do both small businesses and you get to oversee them and use the senior executive experience.
Yeah, I think so. And the other part of it that is fun is the variety, right? When you're working across multiple businesses, you're dealing with multiple challenges, with multiple problems, with multiple peoples, with multiple teams. And that's fun too. I've always liked that variety.
Can you share more about how things at Breakwater are kind of the compartmentalization or not, even the economic split? How does a private equity firm bring in a new partner, you, and then split the economics to go to independent sponsor deals?
Yeah, I think it works somewhat similarly to other independent sponsors. There's the existing portfolio that is, again, related to funds that are fully invested. I do have some involvement there, but not a ton. And so my primary focus is on this independent sponsor model. So we have an economic split kind of amongst us, which would be the same kind of split you would see at other places that are reflective of our relative contributions. And again, we have, I have the benefit of a team that's kind of, been around and has experience, both with the transactional side of things, but also kind of the nitty-gritty of due diligence, putting together a story for LPs, understanding what lenders want, having been a lender, right? Understanding what's going to pass muster with lenders, how to put structure in place that's going to satisfy lenders, the kinds of issues that LPs and lenders are going to be looking for. So I think all of that has been super helpful for me. And because obviously that's critical. It's kind of how you get past go. The fun part is working with the companies, figuring out how to help them grow, figuring out how to solve issues, but getting a deal done at the right price with the right structure and understanding what LPs and lenders are looking for is obviously a critical part of this whole job. So coming into this with a group of folks that have been through all of that has been really valuable.
How did that pivot go for Breakwater? So they were a private credit fund, if I understand it correctly. This predates your involvement. And so how does the conversation even start that, hey, we want to pivot away? Because my understanding is they've left that behind, away from private credit and into sponsor deals.
Yeah, it's a bit of an unusual situation. It's also a bit of a sad story. So they had been looking at launching some kind of private equity effort off of the platform. We had talked about a variety of things. In addition to my colleague Eric, there was a third partner who actually was my good friend, who I had met initially, a guy named Saif Mansour. And Saif and Eric were in the process of raising a third credit fund. The idea was to do this alongside that. And Saif suddenly passed away out of nowhere. Super healthy guy, kind of young guy, mid-40s, of an undiagnosed condition. I always tell people it's as sad as it sounds. He was such an incredible, charismatic guy. And that was very close to the close of what would have been a new credit fund. Eric put that on hold, and we had started talking about launching this effort. And what ended up happening is we kind of pivoted the whole effort of the firm to focus a new business around this private equity strategy. And so that's been a few years.
Terribly sorry to hear about Safe. And so it seems like there was an external factor here that prompted the pivot in Breakwater's business model. But why wouldn't someone like Eric just start a new entity with you? What are the benefits and disadvantages, perhaps, of staying with Breakwater?
Well, Eric's not going anywhere with the existing funds, right? There's an existing portfolio, so he wouldn't be in a position to leave. The opportunity for him was to bring in someone new to help him launch this new effort, right? So think of it as kind of a new business inside of another business. So he gets the benefit of having someone to do a lot of the entrepreneurial stuff, right, that we talked about, right? Because Breakwater has an existing LP base in the funds, but there's not a ton of crossover between kind of the credit investors and the kind of LPs that invest in our deals. And so what I was able to do was to have a structure, right, in a group where I could then go out and both, develop new business opportunities, as you guys said, hustle, right? New business opportunities, which I already had. I was fortunate just because I've been around for a long time to have a really extensive network to start with in the industry. But then to grow that piece out on the new deal sourcing side, and then also kind of leverage the fact that there was an existing platform and build out LP and lender relationships. And I think for LPs and lenders, the fact that there is at least some structure, even though the business that we're pursuing is a little bit different, but the fact that we've got a team and we have a kind of an infrastructure in place, I think has been helpful for us.
In deal sourcing, how would you contrast how it's been to be under an established brand name? When business owners go to check out the Breakwater management website, they'll see more of a track record versus if you had started de novo. How has that experience been for you who are out there sourcing deals?
Yeah, I think it's actually kind of hard to know exactly how it plays out. It certainly doesn't hurt, and it probably helps. But I think, as you guys know, if you're not at a large institution, like I started my career at Lehman Brothers, and I was amazed. I remember being like a month into my job there. I was pretty junior, and my boss asked me to call the CEO of a pretty large bank. And I remember thinking, the guy's not going to take my call. And I called. This is back when you actually picked up the phone and made calls. And I talked to the guy, and the guy talked to me because I was, I worked at Lehman. I was at part of some big platform. So you don't have that here. I mean, Breakwater it's been around, but people in the broader world haven't heard of it. So it really, in terms of deal sourcing, my view is, for what we do, it's about establishing personal relationships with the best people in industry and the best people on the kind of deal intermediary side, the bankers, who I think are smart, capable, good guys, so that when they have an interesting opportunity, whether it's a fit for them or not, I'll hear about it. And they'll be able to tell their clients that, hey, this guy, maybe he knows what he's doing, right? He thinks he knows what he's doing, right? But maybe he knows what he's doing, and you should talk to him. Right. So I think it's a lot of hustling around, but I think it has gotten easier as these things do, right? As you kind of build out your network, and we've started to see yeah, I'd say more and more things. It helps to start to get deals done too. And then people are like, okay, he's not just, doing this kind of on a lark. So it's been, I think the one last thing I would say about this part of the business is, it's just a reminder, all this stuff takes time, right? Like so many good things in life takes longer than you think. You got to invest, sweat, equity into it. And the payback is not immediate, but we're starting to see it on the deal sourcing side. We're starting to see significantly more activity.
So here you have an established company, Breakwater Management. You have a senior executive with an extensive network. So when you say it takes time, could you walk us through? Are we talking months or years? What does that look like in practice?
What I would say is that, we had a running start, right? Because of the two things that you described. But, this business is about having at-bats, right? So when you're looking at an opportunity, there are many things that can cause a prospective investment to not happen, right? It could be the business doesn't achieve its numbers. It could be that the process is super competitive and other people are willing to overpay. The market can change, right? All kinds of things can happen. And so you need to have as many at-bats as possible. So I think it took a little bit longer than I would have expected. We had some things we were down the road on, and that didn't quite get done. But I think that we're starting to see the payoff now.
And the goal here is to build a portfolio of platforms.
That's right.
Yeah,
that's right.
But chemistry is platform acquisition number one.
Yeah.
Great.
And I guess we're going to talk about chemistry in a little bit. Yes.
Let's hear about it now.
Yeah. So as you guys know, super excited about it. I was in Atlanta earlier this week, with the chemistry team, talking about a variety of things, but largely around growth. I had a great call this morning with their head of innovation around AI, which was fascinating. The thesis behind chemistry for us relates to the growth of independent advertising and marketing agencies. So these are agencies that are working typically with CMOs of companies that are looking to reach audiences. And the job of chemistry is to be the strategic partner. So that means developing a brand strategy, developing a creative strategy, doing the delivery of the message, right? Could be media, could be email, could be connected TV, and then helping them build out a digital experience. And so that's what they do on behalf of brands. What's happened in the industry is it, like so many other industries, has been digitally transformed, right? Everybody likes to talk about digital transformation. It's been going on for a long time. And what that has done is it really has leveled the playing field for these independent agencies. It's allowed them to compete for business that they wouldn't have been able to compete for, say, 10 years ago. And our thesis is that some small number of these independent agencies that are full service have an incredible growth opportunity in front of them, both because of digital transformation and because of the fact that you have 3 or 4 of these very large holding companies, which have a whole variety of challenges. And so what we did, speaking of, hustling, is I think we ended up meeting with 24 or 25 of these agency businesses. And that, what that does is kind of like the rest of the business, right? You develop pattern recognition around who's good, what's a good business in this space, what's a good team, who's got a strategy, where are there opportunities. And this one I thought was by far the best team. And so, we were fortunate enough to get this done. As you said, the idea is that it is a platform. And so for us, that means is that we're going to look to invest around it. The growth opportunities for this business, there's obviously growth opportunities on the kind of digital experience, data AI side. That was the meeting that I alluded to. But there's all kinds of other stuff too that we're trying to kind of parse through from a prioritization perspective. An example of that is They have a really cool multicultural effort. That was one of the businesses we met with. A multicultural business is one of the businesses we met with earlier this week in Atlanta that we could partner with. And it's fascinating. It's really like a really fascinating part of the industry because, like one of the reasons, for example, it's fascinating is you talk about multicultural. That used to mean they were developing messaging for, say, the Hispanic community or the Asian community. Question now is the country has become so diverse, right? Isn't it just a multicultural business? And so there's all kinds of cool stuff like that, cool problems, cool challenges to deal with. So that's the story of chemistry. Again, great team. That's where it's got to start, but we think lots of opportunity too.
Jeff, it sounds like if you met with 25 agencies that you had developed a thesis first and went out with a thesis directed goal. And just say a little bit more about this dynamic in the industry of the majors or the holding companies or the big 4 or 5 that of course we heard about so much when we talked to you looking at the deal. What is that dynamic, and say more about the opportunities there? I guess kind of to compete against the incumbents, but of course those incumbents also represent an obvious exit path when the time comes.
One of the dominant trends in the advertising business has been the fact that media consumption has become so fragmented, right? So it used to be way back in the day, right? There was newspapers, there was magazines, there was TV, that was it. There was a ton of economies of scale. If you were a big kind of national advertiser, you worked with one of these big agencies, and they could buy media more cheaply. And it was pretty straightforward. They were able to support these big creative teams because they had such great margins in their media business. Then digital happens, and I talked about things taking a while. And advertising, via digital channels is very different. It's very fragmented, and everything is measurable. And the kinds of economies of scale in terms of delivery of that advertising have changed. And what that's meant is you can be a couple hundred people, like chemistry, a couple hundred-ish, and you can provide a lot of the same services, certainly a lot of the same core services as you're getting from a very large agency. And what a smaller agency like chemistry can do is they can do that in a way that's more agile. They can be more flexible. They can potentially be more innovative. And marketers like that a lot. And what I think has happened in part is it's a little bit like you never get fired for hiring IBM from way back in the day.
Yeah.
It takes a long time, right? So, because I think the playing field has been level for a while, but I think we're now at the point where a CMO can say, hey, I hired chemistry as our creative agency, as our digital agency, as our social agency, what have you. And a board is not going to immediately say, why didn't you hire WPP, right? Mm-hmm. And if things don't quite go as planned, the CMO is less likely to get fired. And so I think that's a really critical dynamic. And what you have to be as the independent agencies, you got to be great, right? So again, that was part of what attracted us to them.
Jeff, one of the features of your career in chemistry is there's this media thread. I use that term very loosely, but we don't see a lot. Well, there is certainly independent sponsor activity in agencies, in marketing agencies, but in kind of media more broadly, kind of LA style media, when we think about it, at least at Minds Capital, we haven't seen a lot of deals in that domain. Tell us what you're seeing there.
Yeah, for sure. So I think the challenge with the independent sponsor model in the media industry is that we need to be able to bring deals to our investors where the businesses are recurring and are, stable and steady, ideally with a bunch of optionality on top of it, right? That's that's generally what we're looking for. The challenge in the media business has been, again, digital transformation. The business has been transformed. The big digital players, Google and Facebook, and TikTok and folks like that have really kind of changed the playing field. As I mentioned, media consumption has gotten a lot more fragmented. It's changed. And so the industry has changed. You had big players there, have big players there. Like the big studios, they've seen their businesses change dramatically with the rise of streaming. The music industry has transformed. And so, the challenge for us as an independent sponsor is finding kind of backable businesses that have, recurring revenues where there's not the kind of volatility or risk that are going to make a deal kind of not doable. Basically, we're not going to do venture capital style investing. It doesn't fit the model. We're not doing large cap deals, right? We're not going to participate in the Paramount Skydance deal either. So it's finding these lower middle market opportunities. So for us, part of that has been, looking, inside sectors of the industry that are doing pretty well. We've spent a lot of time in the live event space. I talked to you guys about that when we were talking about chemistry. We've pursued a bunch of things in kind of live event services. We spent a bunch of time with a B2B events business. We think that kind of the live event ecosystem is, writ large, is interesting because in this world of kind of media fragmentation and social media, live events are doing great. I think what it comes down to is people want to feel that sense of connectivity that you get from actually being around people. So we've spent a lot of time there. That is definitely an area of opportunity. We've got a couple things we're pursuing there, which I would say kind of are, services businesses related to media and entertainment. And we're looking at some stuff in music that has to do with streaming. So we continue to be active in this space. If we'd had this conversation, I don't know, 5 years ago, we might have talked about niche kind of publishers, niche content publishers, which was a theme. Blackstone supported a company called Recurrent Ventures. I think it's 3 or 4 years ago, and that's what they were trying to do. As a for example, they started with a portfolio of niche content publishers. Field and Stream was one, and the idea was that if you have evergreen content and you have an enthusiast audience, you could put together a portfolio of kind of enthusiast apps/websites, and that would be attractive. And I think that's just been a struggle. I think social media consumption has just diluted the ability to build that kind of business. And the big social media platforms have sucked up so much of the economics that that stuff has been challenging. And so, very long-winded answer, but what I would tell you is we've been identifying these niches where we think there's opportunity. By the way, another example is the creator economy. So lots of energy there. Lots of super interesting stuff going on there. We've looked at, as a for example of something we've looked at, is there's a whole variety of people, primarily in LA, trying to build next generation kind of movie and TV studios. And what they're trying to do is they're trying to aggregate these big creator businesses. There are some big creator businesses, relatively big in my world, creator businesses. Super interesting. Somebody will probably do it. The challenge with that, again, as an independent sponsor, is that you have these creators that have 100, 200 million followers, and they're creating content and people are consuming it. It's hard to know where that's going to go, right? In 2 or 3 years. From a platform perspective, are the creators still going to be doing it? You can't say, well, hey, this has been going on for the last however long, and so you LP should be comfortable with that. So again, even in the creator economy stuff, we have found there's something that we're working on right now, which has to do with kind of the services side of the creator economy, where it's more of a picks and shovels. Very tired metaphor, but picks and shovels kind of approach. So anyway, that's a bunch of interesting stuff in and around kind of, media entertainment live events that we're that we're working on. I think we'll get something done.
Well, just to respond to a couple of those things, because at Minds Capital we are media first, we are niche publishers, so some of this was was ringing our bells. On the creator economy stuff, of course, the thing about creator businesses is that the key man, key woman risk is embedded in the very model. That's problematic. Mm-hmm. To your earlier point about the recurrent attempt to aggregate some properties or some media brands, there was a playbook or some examples of that in the old days in trade publishing, where you had big companies that had bought up all these very niche, B2B trade publications and that had conferences and magazines and it worked well, but it just feels like today media is so atomized that it's down to the individual piece of content. I mean, this podcast, this interview here can have an audience. And of course, we are trying to build a brand around this podcast so that people keep coming back for more. But it's harder than it ever was. People might just listen to this one sole interview of ours and not come back again. So just the extreme atomization of content that everything that somebody consumes, it stands alone from everything else, and they're picking and choosing literally as they scroll through their feeds from all these different media properties makes it very, very hard to build a media brand. But we're trying.
Well, I'm a fan for what it's worth.
Good. We got one.
That's right. Let me say something about the trade publishing topic, because I do think it's really interesting. And I do think that for the same reasons that those trade publishers were successful 20, 30 years ago, there is an opportunity that's even more interesting now with digital. And what I mean by that is there are a variety of these businesses out there, and they're doing, and we've been looking, talking, and what they do is some combination of events, right? So they might do an event around, let's say, they're focused on real estate, right? They might do real estate events, and then they might have membership, right? So you might be a subscription model, and if you subscribe, you get some sort of regular news content updates, but also you might have access to the community, right? For things like professional networking. And there, some of these guys are trying to do kind of like an expert network type thing, right? Which is, hey, I have, and there are a couple of IT related businesses that have done this, which is, hey, I have job XYZ and I have this technical problem to solve, and I'm posting it to my closed community of fellow experts. And so it's about community, and it's about advancement, and it is about networking, and you have some live events there. And if you think about, what is that, right? Well, isn't that a lot of the same stuff that these trade publishers were doing like 30 years ago? It's the same stuff, right? So we as a firm are interested. You would love to find one of these, because I think if you can find one that has the right model, they are very valuable, right? They can be very valuable to the members, because again, it's not just about professional learning, and it's not just about news. It's also potentially about career advancement. And then there's this whole idea of kind of a sense of community, like any other community, which I think is certainly a positive as well. So anyway, I think it's interesting. It certainly would fit within our within our target, and there are a variety of. We spent a bunch of time with a couple of these businesses. So this is another one where I'm hopeful we'll get somewhere.
It is very differentiated to look at the media industry. I think it's not common for independent sponsors or my theory on it is that, let me take a step back, actually. People frequently ask me, what does Minds Capital invest in? And I answer, our buy box mirrors that of independent sponsors, because that's who we invest in, and our model is to support the best independent sponsors out there. And the buy box of independent sponsors is actually quite narrowly defined as well. I don't think people truly appreciate this, but they can't really look at distress. They can't really do a lot of growth equity deal. They can't do large cap deals that trade at 8, 10, 12x or more. So it has to be lower middle market that is in the vicinity of 4 to 7x EBITDA. As you said, it has to be stable, steady, with optionality on top of it. And why is this? Because if it doesn't fit that buy box, you won't attract the debt and equity necessary to close the transaction, at least how it's structured today. And so when you come to media products and media companies, they tend to be, the successful ones tend to be much, much bigger. They tend to trade at much higher valuations, and they have some inherent risks, as we discussed, to them that deviate from the typical buy box within independent sponsors. So I think you have an opportunity here, focusing on an industry that not everyone else is able to go after, because it's hairy in a way. And if you can master the complexity of that hairiness, that is the differentiator that you're pursuing. So I think that's super interesting.
Yeah, well, we certainly hope so. What I was going to say is that I was planning to bring you guys an HVAC roll-up. See if you guys are interested in that. Maybe I won't do that now. Maybe I won't do that. Speaking of
it's really funny to me for many reasons that it's almost become like a derogatory thing to say at this point to pursue HVAC deals. It's just it's become a joke, right? You see these memes with the police cars chasing the white van down the road and stuff like that.
Well, look, when I talk to a lot of these LPs, this is it's another mirror on the same point you made, Nicholas, which is that I asked them the kind of deals they've done, and a lot of them will be ticking things off, and they're like, "Well, we've got an HVAC roll up." I'm like, "Of course you have an HVAC roll up, right?" People need to stay cool. I think that's the message, right? Everyone needs to be, and warm in the winter. So you warm in the winter, cool in the summer. It's not going away. But to your point though about about media, as I said, I certainly hope that that's the case. Around the whole kind of sponsor model in general, independent sponsor model, we're certainly at the stage we're at. We're focused on deals that are going to kind of fit in that box, right? The one that you very articulately laid out. But I do wonder, right, if we were to bring the right opportunity to the right investors with the right thesis, if there's an opportunity to kind of get out of that box, because it's a big it's a big world. I don't think that we would. I don't want to do distress, right? I've been kind of around some distress stuff in my past, but certainly if there's an opportunity, maybe that's a little bit growthier, right? But where you can secure the opportunity, that's interesting. I think the other, the other reason that independent sponsors tend to play in this kind of value range is if you have a business that is pristine, right? Incredible growth, incredible team, incredible opportunities, wide open playing field, then you're going to have, a ton of funded sponsors that are going to be chasing after it, and strategics. And so part of the challenge for us in media, as in all of these other kind of independent sponsor categories, is there's going to be something that's potentially kind of either kind of imperfect about the business, or there's going to be some perception that the market is not is not one that makes sense for this kind of investing. And I think that's part of the thesis for us around, media and entertainment and some of the marketing stuff, which is people just assume there's not good opportunities like this. And so there's relatively less people chasing it.
And so you talk about the thesis, and so you went into the marketing world here with your chemistry deal, having a thesis, and then you said over 24 conversations, you also developed pattern recognition. So is it always a volume game, and exactly how many conversations or how far into an industry or thesis do you need to be in order to have that level of confidence?
Well, that's a hard question. Look, I think it depends, right? And what I would say is, I went into this thinking that we needed to be solely thesis driven. And, my colleague has a great saying, which he stole from someone he used to work for, which is, I like to buy businesses that are for sale, right? So there is that element, right? Which is, you've got to, given what we do, there's got to be an element of opportunism, right? And so you have to sort of, the Venn diagram of that is you have to have enough of a grasp of the industry and a reason to win, that there's a fit. That's one of the first things I ask my team when we look at something is, well, why would we own this, right? So because one of the areas that we talk about focusing on is tech-enabled services, which I think I've talked to you guys about in the past. It cracks me up because what service is not tech-enabled these days, right? So trying to define kind of where we can win and why we have a reason to win. And some large part of that may be the expertise we have or the expertise that I have. And so it's about sort of balancing, developing a thesis and having lots of conversations with, also being willing to be opportunistic. And I think that's what we're trying to do.
Going back a minute here, Jeff, and I heard you say the word growthy and thinking about media. And you both, I think, said hair about media, that it just doesn't slot neatly into enduring, reliable, predictable. It's a dynamic world, media. But of course, there are opportunities for people who are comfortable with that. My point, Jeff, is that in your career, which we didn't have time to go all through, but I know that there was a lot of finding white space in industries where you were an executive, and so going after new opportunities, new markets, or new opportunities within markets, which really, again, isn't so much the independent sponsor model, where it's more the tried and true stuff that attracts everybody. So, how do you think about looking for white space opportunities when in your deals?
Yeah. So look, I think that it's, this is probably oversimplifying it, but I think that it is a balance between, we have to invest in what I call real businesses, right? Businesses that make money, where there's visibility into how they're going to continue to make money. And then ideally where there is white space. So in the case of chemistry, the white space is building a next generation, sorry for the lingo, a next generation full service independent advertising and marketing agency, which kind of sort of exists, but kind of sort of doesn't exist. And so what that involves is doing everything that chemistry is doing now, but then also making smart investments into where the industry is headed. So in chemistry's case, some of that is going to be around, data analytics, predictive analytics, all of that stuff, which there are people that do that, but not, it's very brand new. And then I talked about the multicultural stuff. Like you would think there would be some huge kind of multicultural agency that really specializes in that, and that doesn't quite exist. And so that is white space, but white space does not have to mean venture style risk. I think that's kind of what it comes down to. And that's where the opportunities are a good fit for us. Good, solid business with good, solid growth prospects, with optionality in some white space that doesn't involve some massive venture style risk where we have to invest a substantial amount kind of out ahead of understanding whether there's going to be a payoff.
Just to double click on this one a little bit and to challenge your thinking, Jeff, you had made it seem like you have a process that you have developed from your time as a senior executive to develop white space theories within established businesses where you are, and probably also to add on to thesis that you have for targets you're looking at. So how does that process go? Do you have to be an industry insider, for instance, in order to be able to perceive these opportunities? And then how do you create white space opportunities or build confidence around those?
What I believe very strongly is that if you're not sector focused in a sector that you actually have lots of experience in, I always wonder how you have any success other than luck, really, right? Because we talked about pattern recognition. So even if the businesses we're investing in are not exactly the same model or exactly the same business as all this stuff I've done in the past. There's all kinds of similarities. And so I think if you don't understand the industry dynamics and you haven't seen it evolve, I just think it's way harder to have any clue, what's going on and what's going to recur. And so I think that and then beyond that too, again, a super obvious point is a good sign for me that I'm kind of headed down the right path in pursuing something is I can pick up the phone and call a bunch of people. Oh, I know this person, I know that person, I know this person because I've worked with them in the past. And even if they're not doing exactly the same thing, they're going to have some insight into it. So we're looking, for example, we're looking at a couple of things now that are kind of in and around this kind of live event, entertainment, music stuff. And so there's people I can pick up the phone. They've had very, senior roles in industry, senior investment roles, and they know, that they know what they're doing. And so I think if you don't have that, I think it's really hard. Like for me, I imagine investing in like a healthcare company. I just would be clueless. I have a friend that has a really interesting healthcare startup, and he calls me for advice a lot. And I find myself not having a lot to say because I don't understand the industry dynamics. I don't understand the regulatory framework. I don't understand, how you grow these businesses. I don't understand any of it because I don't have I haven't been there. So anyway, again,
that's an interesting contrast, Jeff, between you and maybe a lot of first-time sponsors who are often industry agnostic. Sometimes they come from a particular industry, develop a thesis, and go after it. But many, many sponsors for their first deal are industry agnostic, kind of like for the reason that you cited earlier that they, when you're not as established, you need to be opportunistic about the deals that you look at. So
yeah, and I understand that, and I guess also I've thought about this, of course, and I think it may be if you pick the right business, or maybe there are less moving parts, an industry that has less moving parts, where you can put your arms around it, you can bring in subject matter experts. That obviously is working for people. It's just not the model that we're pursuing.
Jeff, this conversation that was so exciting with chemistry about AI, can you give us a window into that?
So, I'd say a couple of big takeaways. One is the pace of progress is greater than people think if they haven't been in front of a lot of these tools out there. So if you're playing with ChatGPT a little bit, you get a little bit of a sense of it. But there's so many companies that have been created doing so many amazing things. And so I'd say that's one big takeaway. It's going faster than you think. There's all kinds of cool stuff going on. And I think that the pace of innovation is outstripping the ability of industry to keep up. So part of the conversation we're having today is there's all these cool AI tools. And for chemistry's clients, they've got to put the brakes on some of them because there's all kind of there's the legal privacy stuff. There's a question around, IP ownership, depending on what it is. And so you've kind of got that going on. And then you just have this question around, with all these providers out there and all these, it's a brand new industry, right? So there's all these providers. Who do you partner with? There are these large platforms that are trying to create horizontal solutions. There are vertical solutions, depending on what you're looking at. And I think we're in this period of really intense innovation. So as an agency, what chemistry is doing now is they're bringing this expertise to their clients and they're helping them navigate through it. So it's very much like a strategic advisory kind of role at this point. And then what they're doing is they're kind of picking their spots around here's some solutions that we can implement now that can typically right now it's about efficiency, right? Or it's about, hey, we can generate on the kind of creative optimization side, we can do 1,000 tests, A/B type tests, where we used to be able to do 10. On the back end, in terms of kind of number crunching, and analytics. There's a lot of action there where you can predict things that you couldn't. There's a lot. The chemistry guys are super excited about the idea of the concept of personalization. So if I am marketing to you, you come to my website or you come to my app, and what AI can do is it can dynamically personalize the experience for each one of us. So, the example they gave, which is like where we are today, is a really primitive example. Like if I live in Texas, everything comes back to HVAC, by the way. If I live in Texas, it's really hot. And so, and so we know you're in Texas, depending on what our product or service is, if it's relevant. The example they were giving was in the kind of home services space, right? It actually was not HVAC, but HVAC related, ironically enough. You should see something, right, that causes you to, that prompts you there. Super primitive example, but so that's another theme. So I think, again, sort of the themes that I took from the call are, hey, it's going really fast and everybody sees the headlines, but there's a lot to work out to implement that. My view is it's going to take longer than people think. That's one. And then the second is you have this incredible profusion of tools and startups and companies that are doing varieties of the same things and overlapping things. And if you're looking to partner with them, you need to choose wisely, right? And then the last piece is just this idea of, picking spots where you can, from the chemistry perspective, where you can demonstrate clear value, right? Because every single CEO is having an AI conversation with their board, right? Of course they are. And so being able to deliver some concrete results that the CMO can take to the CEO and the CEO can take to the board is something that I think is important as well.
Well, you do seem to be in a great position to, as you said, to be the strategic counsel on AI as a digital agency already. That it's kind of the expertise that they would look to you for. I saw a statistic this week, or a headline that was about the anxiety that keeping up with AI is producing. More than half of white collar workers feel increased anxiety, not by AI, not that AI is going to replace their jobs. They feel anxiety about that too, but just the need to keep up with it is driving people crazy. And to your point about like how it'll take longer, despite how fast it's moving and the profusion of tools, like it's still humans. We humans have to digest all of these new tools, and there's a ceiling on how fast we can do that. So it'll be interesting.
Yeah, and it turns out there's all kinds of complexity, right? Like somebody pointed out to me that the AIs it needs to be able to absorb data, right? And if the data is not in a format that is absorbable today, then there's going to be a delay, right? And there's different categories of data that are going to be inaccessible for a while. So it's super interesting. So my oldest son was working at an investment bank in New York, and he left and he joined a venture firm that is an incubator as well. And a lot of what they do is AI. And he's been there for a couple months, and he is convinced that his little brother, who's 19, is not going to have a job. And I'm like, dude, it's going to take some time. It'll be time. I don't need you making your brother anxious, and it's going to take some time.
Jeff, on that note, actually, you just if you had bought an HVAC company, I don't think AI would be a huge part of underwriting that company.
Yep.
Now, when buying a digital marketing agency, that can quite obviously be impacted. Either it can be hurt by AI or it can be enabled by AI. How do you go about underwriting it to get comfortable with it, and then answering these questions to investors in a way that they get comfortable with it too?
Yeah. So the AI conversation, it was really interesting. Some of the investors were very focused on it, and some of them were just not that worried about it. Kind of much to my surprise. I think my view on this question is you can lay out a very clear and convincing argument that in the near term, there's a ton of opportunity for businesses like chemistry with AI. A lot of it is about efficiency and about using data better. The question is there going to be either margin compression or disintermediation over time? And the argument that we made to investors, which I think resonated, is that one of the key aspects of the chemistry's business model that we liked is they are very explicitly positioned as the strategic partner to CMOs. That's where they start. So they are working with CMOs on what is the meaning of the brand, what is the messaging, right? How are we going to create the messaging? What's the creative? Through to the delivery and the digital experience and the data part too. And with the notion being that maybe someday, CMOs will use an AI as their strategic partner, but it may be a long way off. By the way, maybe someday CEOs won't need CMOs. Maybe we won't need CEOs, right? If you do this thought experiment, you can kind of,
Right.
Maybe we won't need podcast hosts. Maybe we won't need guys like me that wear, blue Oxfords and run around and try to do deals. So I think for the foreseeable future, though, what we liked about it is that this is not a business that is about kind of process automation. I would be more worried. We've been looking at kind of elements of performance marketing, which I worry. We're just having this conversation this morning. I worry there are things about performance marketing that might just get kind of automated, where the margin is going to get automated out of existence. But this idea that you need a human judgment to sit with a CMO and their team and figure out how to engage an audience to sell them stuff, we think is kind of long-term valuable as a human tool, and therefore the AI tool set that sits behind that will make the business more powerful, not less powerful. That was the pitch.
Well, Jeff Goldstein, we appreciate your time today. Really interesting thoughts on media and the direction of it and the opportunities for independent sponsors. Not an industry we hear about much, but one that is near and dear to our hearts that we play in. So a lot of fun there. And of course, just to repeat what we said earlier, we're thrilled to be in chemistry with you. And if you have any other deals, any of these theses that you're developing in media materialize, I hope you'll keep Minds Capital in mind for those as well. Thank you very much.
Great. Thank you, guys.
Hope you enjoyed that interview. For more like it, subscribe to Meeting Other Minds wherever you listen to podcasts. You can also watch us on YouTube. And check out Minds Capital, where Nicholas and I are partners alongside Max Lummis. Minds Capital invests equity in independent sponsored deals. So if you're a sponsor with a deal under LOI, please visit mindscapital.co to start a conversation. There's also an investor tab on our website with information about partnership opportunities and future fundraises. See you in the next episode.